Welcome back. I'm Pratap here. Today is 20 September 2024. In this video, let us evaluate the performance of the high liquidity zones generated from our yesterday's end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, you click on the tab Posts. Some of you might be seeing the tab Community. Whichever the tab you see, you click on the tab, then you will get access to this post. This post is having a YouTube playlist link that will take you to the training lessons. Just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1. All the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday end of the day report, we have identified 8 high liquidity zones from daily and 75 minutes time frame. So we got multiple opportunities today. And each opportunity is a successful trade and they gave very good profits. And TCS, the first one, has given 3 opportunities. At different opportunities, the concepts you learn, and one new concept I am going to teach you today that is based on a bullish trade setup scenario, how we can book the profit in the intraday. Okay. TCS is a daily high liquidity zone. See here we have this is a rally candle, this is not a base candle. How it is a rally candle? At the hidden body from the close of the previous candle, the moment you add the hidden body, this is going to be a rally candle. And 2 base candles and then again a rally candle. And follow through candles. So this is the zone identified by high liquidity zone by our software. And how I fine tuned this zone? Because this is a daily zone, first we need to fine tune with 75 minutes time frame. In the 75 minutes time frame, we have a drop, we have a base candle, and then we have a rally candle. Drop, base, rally. After that, have you noticed some rejections in this area? This itself is an indication that this zone might be having an entry buffer, dynamic entry buffer. I have explained the concept, dynamic entry buffer concept in lesson 21 related to the high liquidity zones. And what is that concept I told you, dynamic entry buffer? Mostly at smaller time frames like 15 minutes time frame or 5 minutes time frame before the zone, institutions keep a dynamic entry buffer, even sometimes 1 minute time frame also. And these dynamic entry buffers, many times they does not easily let the prices get into the high liquidity area. Sometimes it will take several attempts to consume the order flow in this dynamic entry buffer and then only let the prices enter into the fine-tuned area. This is what I explained in lesson 21. So one such kind of entry buffer is there at 15 minutes time frame. But at present we are at 75 minutes time frame. But earlier I am giving you these price actions has given some clue for us. Indicates there could be a dynamic entry buffer. Okay, anyway we fine tune the zone with the drop, base, rally. But here again I drawn a zone. This is not a fine tuned zone. Why I have drawn this zone? This is the new concept you are going to learn today. Why I have drawn this zone? Maybe you may say by seeing this, this is a aggressive trade setup. You may think like that, right? Just keep this point in your mind, whether it is right or wrong, or this or same concept linked with any new concept that you will understand very soon. But before that, we have a fine-tuned 75-minute zone, drop base rally. Again, this fine-tuned zone we need to further fine-tune with 15 minutes time frame. So I am changing the time frame to 15 minutes time frame. So in the 15 minutes time frame, you have a failed ERC candle. This is a ERC candle, 15 minutes ERC candle. It can be used as a leg-in. You can consider this as a drop candle because prices were dropping. Don't look into the body. Failed ERC candle, the body is very small. That's why always you should look into the price action. The price action is like a drop here. Then base candle, then again a rally candle. This is also a failed ERC candle. This failed ERC candle can be used as a leg out. I told you, failed ERC candles can be used as a leg out in few special scenarios. This is one such kind of special scenario. The reason is the prices were rallying away from the zone. And finally they are closed above the zone. So that's why you can consider this as a rally candle. This is not a drop candle. Because failed ERC candle, if you are looking into the body and if you take a decision, mostly your analysis will be wrong. Based on the wicks and how the prices are closed, based on that only you need to take decisions. Excuse me. So drop base rally, this is the 15-minute zone. Still here there is no 15-minute zone, that means it could be a 5-minute zone, right? But here, before this zone, have you noticed? Rally, base, rally. The 15-minute zone. Excuse me. Maybe could it be an entry buffer? Let us verify. So next I am going to the 5-minute zone. Again, how I fine-tuned the zone. Rally, 2 base candles and a rally. Sorry, not that one, this one. We have a drop, 3 base candles, and then again a rally candle. You need to consider this as a rally because prices were moving up. And finally closed here. So that way, if you add the hidden body, this is going to be like a rally candle. That way you should understand. This is the fine-tuned 5 minutes. This is like a hidden zone. This fine-tuned 5-minute zone is a hidden zone. You can also consider rally, base, rally. This is also valid, nothing wrong. But the problem is this is not a fine-tuned zone. Maybe you can consider this as an aggressive trade setup. The reason is prices were moving. Again they came before the zone. Again they started moving up. Maybe institutional order flow might be there. That way you can plan an aggressive trade setup. But time being, let me delete this. I'm just telling you that is an opportunity to consider aggressive trade setup. But I have given more importance to this fine-tuned zone. This is the fine-tuned zone. What about this? Rally, base, rally. This is a 5-minute zone, right? Okay. What kind of trade you want to plan? Can we plan an aggressive trade here? No. The reason is there is no price action clue. At least prices are coming here and before this zone they were started moving. At least we can say there could be a strong order flow in this area. Definitely this is not an aggressive trade setup. It is a normal fine-tuned 5-minute zone. I repeat, this is a normal 5-minute zone. Many times such kind of zones will be violated. That's why always we plan in a fine-tuned zone. And sometimes we will plan even in aggressive trade setups if price action clues are very strong. There should be strong price action clue. But it doesn't have any price action clue here. Then why I have drawn this zone? I will explain a little later. Just keep this point in your mind, why I have drawn this, what is the speciality, what is the new point I am going to explain. Okay, meanwhile, this is the 15 minutes dynamic entry buffer. It is having a fine-tuned 5-minute zone. Type 2 proximal I have drawn. If you draw week to week, it will be like this. See here, it picked up the orders earlier from this zone. When? Not today. This is on Wednesday. This is the first clue indicating that this could be a dynamic entry buffer. Or if the risk is high, you can still plan in type 2 proximal. Already type 1 is tested. Maybe next time still type 1 also may give another entry. That possibility is also there. But why I have drawn type 2 is to minimize the risk, add some entry buffer. Before this I will add entry buffer. That way I will manage my trade plan. See, after that it took the trade from the type 1 proximal of the 5-minute zone, and then they started moving up. See, the prices went after taking the trade from the dynamic. This dynamic entry buffer does not allow the prices to get into the high liquidity zone. After that, a daily supply zone is created. This is a normal supply zone. Why I have drawn target for this? Why I should target? That means some important point I did not tell you. Why? The daily zone should be the target. Daily zone is the target not for the intraday trades point of view. This daily high liquidity demand zone is also supporting bullish trade setup for monthly income trade. Yesterday in the Telegram group, I sent a message. The first 2 zones in the daily time frame, they are supporting MIT trades, monthly income trades. Stocks are near both the stocks. We have identified only 2 high liquidity zones yesterday. The TCS and GNFC, both are daily high liquidity demand zones, and both the zones are supporting monthly income trade, bullish trade setup. And also they are supporting high probability trade setup. TCS is also having a weekly zone confluence is there. This TCS demand zone. So it's supporting high probability setup. And moreover, it is having a dynamic entry. See today what happened? Again it has given near to the type 2 with small entry buffer. It has given an entry here. After that it reached the 15 minutes target. Again it gave one more trade today. Again it reached the 15 minutes demand zone. See, this is the first entry. Reached the 15 minutes target. See here, this is the second entry. Again reached the 15 minutes target. When we got the first entry at 10 o'clock 15 minutes. And when it reached the target, 10 o'clock 45 minutes. That means within 30 minutes the trade is completed. Why? Because the volatility is improved in this. Because this is a bullish trade setup. And again when you got the second entry at 12 o'clock 30 minutes. And when it reached the target, 12 o'clock 50 minutes. In 20 minutes, the trade is completed. This is 12 o'clock, 20 minutes and 40 minutes. 5 minutes candles. So within 25 or maybe less than 25 minutes, the trade is finished. See, both the trades, how fast they have given you the returns. So how much profit we got? Before I get into that area, I need to explain the third trade also today. See, after that what happened? This dynamic entry buffer is completed because it is having some life. Sometimes dynamic entry buffers may stay for several days, sometimes within the intraday. See, already this was the first entry, dynamic entry buffer. It has given, see, in dynamic entry buffer before the high liquidity zone, first time we cannot take the trade. The reason is first time they will giving you the clue, this could be a dynamic entry buffer. Second time onwards, you can take the trade. That is what I have clearly explained in one of the videos in lesson 21. You have a separate video in lesson 21 for dynamic entry buffer concept. So TCS has given 2 dynamic entry buffer trades today. If you would have taken a third trade, it might have been stopped out. It is possible, because as third time also some of you might have taken a trade. If you take, that would have been violated. But anyway, risk is very small. But focusing on these 2 successful trades. Excuse me. Next, it has given a trade from this 5-minute zone. See here, we have a rally, 2 base candles, and again a rally candle. The prices entered into this 5 minutes area, and from this 5 minutes area, it took a trade, and finally they reached this 15-minute zone. And this 15-minute zone could be a high liquidity zone. How can we say it is high liquidity? It is continuously holding the prices. See, first time it is tested, it pushed down. Second time it is tested, again pushed the prices down. Third time it is tested, again it pushed the prices down. Fourth time, almost at the closing hours of the market, it tested. Some push was there, but this is there is no enough time. So tomorrow, is it going to hold the prices and again further push? Or this might be violated further? Maybe that's possible, because every high liquidity zone will be having some expiry period. It has to be violated at some point of time, and then after it is violated, it will be traveling towards reaching this daily zone. Why daily zone? Because this is a daily high liquidity zone, is a bullish trade setup, monthly income trade. Yesterday in the generated reports, in bullish trade setup, monthly income trade, TCS is there. Even I have also given a hint in the Telegram channel. Both the zones from daily time frame, daily high liquidity zones are bullish trade setup stocks. So some people today might have taken this trade for bullish trade setup, and maybe at this 15 minutes they might have exited, or still holding until it reaches this. Why we have to exit in the 15 minutes? Because this is a high liquidity. We don't know how it will behave in the coming days. And some people who are targeting for a long, we see this is a huge target, right? Some people may exit at the proximal line of the daily supply zone, or some people may exit at this fine-tuned area. And fine-tuned area at 15 minutes or even 5 minutes, see, the structure is not good. Easily it will be violated. And maybe in this fine-tuned 5 minutes area, prices may go and again it will push down. Anything will happen. You may keep your targets depending on your analysis. Or based on trailing stop loss, you can aim up to this fine-tuned area. If trailing stop is stopped out, maybe at the time you can exit. That way also you can plan. We have different strategies when to exit. Okay, fine. So before I show you these profits, now let's enter into our important discussion. Why we have drawn this 5-minute zone, which is not having any price action clues. Still it worked successfully. How can we say it will work successfully? How we predicted it? Because the price action is happened. By seeing the price action, are we saying this zone will work? We cannot tell like that. Because when we are saying we can take a trade in this zone, there should be a very strong justification. Without strong justification, by seeing the price action, we cannot tell it is a successful trade. Because always we are saying the 5-minute zones which are not fine-tuned, they will be easily violated. If we want to take a 5-minute zone which is not fine-tuned, that should be taken as an aggressive trade, but aggressive trade should always be having a strong price action clues. Is there any price action clue? Are there any rejections before this zone? No. Is there any pro gap from this zone? No. Is it a high liquidity zone? No, this is not a high liquidity. I already verified in our software. This rally base rally is a normal zone. This is a high liquidity zone. This rally base rally is a high liquidity zone. Even though it is an entry buffer, the reason why it worked multiple times, this is a high liquidity zone. This is a C underscore demand zone, 5 minutes demand zone. Why generally C underscore demand zone is not much stronger compared to R underscore demand zone. But still why it worked multiple times? Because it is a high liquidity, there is no doubt in that. This is also acting as an entry buffer. So these are all the reasons. Okay, anyway, why this 5 minute zone is worked? This is a question mark. The first point you should understand, all of you please listen carefully. The first point you should understand, TCS is a MIT trade setup, bullish trade setup, monthly income trade, bullish trade setup. It is also having ITF zone confluence. Yesterday in the reports I have clearly explained. It is having ITF zone. That means this daily zone is part of the weekly zone. Let's go to the weekly time frame. Let's verify. Even I didn't verify till now. Just trusting our software. Definitely there should be a weekly confluence should be there. See, drop base rally. This is a weekly zone. This drop base rally is a weekly zone. So this zone is having confluence with the weekly zone. So it's a high probability trade setup. Okay, let me go to the 5 minutes time frame. Okay, that means what I am trying to say, it is a high probability setup for bullish trade setup. Not only that, the daily zone is also a high liquidity zone. In general, high liquidity zones is having strong order flow. Okay, the strong order flow will be there in the fine-tuned area. But this 5 minute zone is not a fine-tuned area. The reason why this 5 minute zone worked, that you should understand not only from high liquidity zones point of view. If you are purely thinking from a daily high liquidity zone point of view, you won't recognize this importance of this 5 minute zone. If you are looking this high liquidity zone from bullish trade setup monthly income trade point of view, you will understand the importance of this 5 minute zone. And lot of order flow will be there in this 5 minute zone. How can we say there is a lot of order flow will be there? What is the reason? The reason is, think from the bullish trade setup point of view, monthly income trade, bullish trade setup point of view. How people will plan their monthly income trades? Okay, let me go to the daily time frame. How we drawn the zone in the daily time frame? See, this is a rally candle. This is not a base candle. Already I explained. This is a rally candle, 2 base candles and then a rally candle. When you want to take a trade in the monthly proximal line, where do you plan? In type 1 or type 2? Many times for the risk management point of view, we plan our trades at type 2 proximal entry. So this is a type 1 proximal. Now let me change this entry to type 1 proximal. See, I minimized the risk. Earlier it was like this, week to week. Now highest body. What is the highest body? This base candle. We have 2 base candles. The first base candle is having highest body. Now I am reducing this proximal entry. Exactly type 2 proximal entry. Have you noticed this 5 minute zone? Now let us go to the 5 minutes time frame. Now I have changed the proximal entry of the high liquidity zone to type 2 proximal. See, now this is a type 2 proximal. Earlier week to week, highest week we have drawn. Earlier this was the type 1. Let me draw horizontal line. Earlier this was the type 1 proximal entry. Now this is the type 2 proximal entry. Exactly at type 2 proximal entry, there is a 5 minutes zone. And many people keep their orders in this 5 minutes zone area. See how smartly institutions played here. This is looking like a normal 5-minute zone, but it is having a lot of importance because the location where this 5-minute zone is very, very important. It is at the type 2 proximal entry. That means you may ask a question, for every type 2 proximal entry, if there is any zone, is it having a very good importance? No. The answer is no. Because it is bullish trade setup and this zone is a daily zone and this bullish trade setup is a monthly income trade bullish trade setup, this 5-minute zone got the importance. If this is not a monthly income trade bullish trade setup, if it is a normal demand zone not supporting any bullish trade setup and 5-minute zone is there, this 5-minute zone we won't plan any trades because currently trend is not supporting. And this stock trend is supporting, trend is in our favor. Which trend? The weekly trend. Because in monthly income trade bullish trade setup, entry time frame is daily, but trend is weekly. So weekly trend is uptrend. And at type 2, many people place their orders, buy orders at type 2 proximal. Exactly at type 2 proximal, 5-minute zone is there. Then we can plan an intraday trade at this zone. How you can plan? At type 1 proximal you can plan if risk is within your accepted limit. If risk is not within your accepted, at a type 2 add some entry buffer you can plan. But don't take a risk, go for a type 1. Why type 1? Because it is a bullish trade setup, monthly income trade. Many times it just touch this proximal line and it will go up. Or little inside. A little, very little. Below that type 2 proximal, it will enter and again prices will go up. So that is the reason why don't take any additional risk, because first time this zone is getting tested. This is the first time prices are entering into this zone. They just kiss the type 2 proximal and they may fly. So that is the reason why we have planned our trade at type 1 proximal. Even if you take type 2 and some entry buffer, you would have got the trade. Your trade would have been successful today. See here, just touched and then went a little below, and see the rejection after that, very sharp rejection, because all institutional order flows, not only institutions, whoever is demand and supply zone traders looking for bullish trade setup in TCS, they all would have kept their orders in this zone. Actually supply is very strong today, but the moment they went, first of all, supply is consumed by this entry buffer, dynamic entry buffer. Lot of supply it is consumed here. After that, institutions further increased their supply and pushed in such a way dynamic entry buffer is violated. But before violation, it might have consumed a lot of supply. And remaining supply consumed within this 5 minutes area, this 5-minute zone is at a type 2 proximal. Because it is a bullish monthly income trade, bullish trade setup, this 5-minute zone is having a lot of importance. Suppose if it is a weekly income trade and this 5-minute zone is there at the type 2 proximal of weekly income zone, which is not a fine-tuned, still you can give importance. Any bullish trade setup, you can give importance to this 5-minute zone. And moreover, this is monthly income trade, daily zone and type 2 proximal. This 5-minute zone is there. It is a very good zone. Suppose any reason if it is violated, your stop loss would have been hit, you would have exited from this trade. After that, below you have a fine-tuned area. Again, once again, you might have planned a trade. But it is not easy to break this 5-minute zone because it is a bullish trade setup, monthly income trade, and also having zone confluence with the weekly time frame, and all many parameters are in our favor today. So that's why after that, see the rejection, how prices pushed, and then some struggle sometime, and finally prices were moving, and again this 15 minutes high liquidity zone, this is a 15 minutes high liquidity zone, not letting the prices to go further. So tomorrow, if anybody is carrying the positions, tomorrow is a critical day, and how this 15-minute zone is holding the prices, you should carefully observe. But those who wants to exit in the intraday, they want to take a trade in the bullish trade setup, because a bullish trade setup is a powerful trade setup, trend is in our favor, and moreover it is a high liquidity zone, and also it is having ITF zone confluence, that is 75, that is weekly time frame confluence. All these parameters are in our favor, so definitely you can plan a trade, intraday trade within this 5 minutes area, and you might have exited here. There is a possibility some of you might have been exited here, drop, base, drop. This is violated. Some people, instead of exit at within this high liquidity 15, you might have exited here. Here 15 minutes you have a zone. See here. This is a fine-tuned 5-minute zone. And actually this is the like this you would have drawn a 15-minute supply zone. Inside 15 it is a 5 minutes fine-tuned area. But remember, from where this order flow is started, again from this high liquidity 15-minute zone. See, the leg-in candle picked up the orders. After that zone was created and came. That means the actual origin is this is the high liquidity zone. That is the reason why prices traveled up to this original parent high liquidity zone. This is one of the reasons why I didn't give importance to this zone. I know that because in high liquidity zone it creates a new zones again and again. That is what happened. The high liquidity 15-minute zone created another 15-minute zone. If that is the case, many times prices will be reaching its parent high liquidity zone. This is the parent zone. Okay. So you might have exited in this candle. Those who wants to exit early, probably at 2 o'clock 45 minutes candle, you might have exited. Because especially those who are taking trades in cash segment, you have to exit by 2 o'clock 45 minutes. Otherwise, your broker will be automatically, he will execute the trades. So probably in this candle, somewhere here after prices reached, you might have exited. But those who are taking positions in futures, even last minute of the trading session also you can exit. So future traders would have captured up to here. You took a trade here and you exited. And those who wants to target up to this daily supply zone might have holded the positions, because this is a bullish trade setup, monthly income trade. Probably you will hold for the next few weeks your position in TCS until it reaches the daily supply zone. Okay, how much profit we got in TCS? TCS we got 3 successful trades. See, first 2 trades in TCS are dynamic entry buffer trades. And the third one is a DIT bullish trade setup trade, but planned in the intraday. This is intraday traders' point of view. But DIT traders, you will hold the position for the next few weeks until it reaches the daily target zone. Okay, the first trade it has given 6,020 rupees. Second trade it has given 6,033 rupees. Okay, almost same you would have exited if you kept any entry buffer before the target zone. And they have given ROI 4.6%, both their trades. These are the dynamic entry buffer trades. And this is the fine-tuned zone. It's not the fine-tuned zone. It is at the 5-minute zone, at type 2 proximal of daily zone. DIT bullish trade setup, DIT bullish trade setup, type 2 entry. And target up to 15 minutes HLQ supply zone. It has given 9.2% ROI. The third trade has given 9.2% ROI. So excellent. And the second bullish trade setup is GNFC that we discussed at the end. The reason is we are yet to get an entry in this zone. Today we didn't get an entry. Only TCS we got the entry. Next one is Ramco Cements. This is a daily high liquidity supply zone. We have a rally candle, 2 base candles, and then a drop candle. Rally, base, drop. So this high liquidity, daily high liquidity supply zone, we fine tuned with 75 minutes time frame. Here we have a rally, 2 base candles, and then a drop candle and follow through candle. This is the 75, and also we have one more 75 minute zone. This is the one. Drop, base, drop. Drop, base, drop. And both the 75 minute zones again fine tuned with 15 minutes time frame. The first one, we have a rally candle, we have a base candle and a drop candle, and prices moved down. Rally, base, drop. This is the 15 minute zone. The leg out is not really great, but okay. To find the 5 minutes order flow, sometimes we may compromise a little while fine tuning. And here you have a ERC candle, failed ERC candle as a leg-in. You have a base candle and then you have a drop candle. This is the 15 minute zone. And here you have a fine-tuned zone, 5 minute zone, that we will see in the 5 minutes time frame. Before I explain how I fine-tuned, actually here we got the trade, but before that, how I fine-tuned the top one, let me tell you. Here we didn't have any proper order flow. See here, we have a rally candle, we have a drop candle. There is no institutional order flow here. But if you see the previous price action, you have an excellent institutional order flow. Drop, base, drop, and then price, see how prices went down. This is the 5 minute zone, and this is the origin. This 5 minute zone is the origin for the creation of this entire daily high liquidity supply zone. The whole daily high liquidity supply zone was created by picking the order flow from this area. That's why this zone is having a strong order flow. Maybe in future when prices are entered into this area, we can plan a trade. Definitely we will get some successful trade opportunity from that area. Okay, for today already we got a trade in this fine-tuned 5 minute zone. How the fine-tuned 5 minute zone is there? See here, this is a failed ERC candle as a leg-in. You have base candle 1, 2, 3, and if you consider up to here, the risk is very, very high. To minimize the risk, what I did, because the risk is beyond our accepted level, I planned for a type 3 proximal. This is a type 3 proximal. If prices really enter, we take a trade. Otherwise, maybe we keep small entry buffer before this. We can plan a trade because risk is minimized. Suppose if prices did not enter, we will be missing the trade. And today, just reached this type 3 proximal. It gave a trade here. After that, before reaching, once again prices entered. But it didn't it didn't violate the zone, just touched the digital line. In this candle, just touched the digital line and then came down, and once again a new zone is created, rally, base, drop, and lot of price action, and finally reached the target. Okay, but some people, you may not be having patience to wait until this area. You might have exited before. When you took the trade, first trade at 12 o'clock 15. And when it reached the target at 3 o'clock, 5 minutes candle it reached. We may not be having patience to wait for almost 3 hours time. You got a trade, but it didn't reach the target. Once again it is entered and coming down. Probably somewhere in this area you will exit because there are some rejections are there. Because of the rejections, you don't want to wait until it will reach. It may reach and again it may go. If rejection is there, there is a strong order flow in this area. maybe at 5 minutes time frame, already this is 5 minutes, maybe 1 minute or maybe at a tick level you may see. 1 minute also you can't find a proper order flow here. But definitely at this near this area, a little above or little below, you will plan to exit your trade. Those who exited at this blue color area, maybe you would have taken a second trade. The second trade easily it reached the target. But I am considering as only one trade. See where you exit, that is all depending on our psychology. A trader psychology, based on a trader psychology, how long you are holding this trade, it depends on. Where you exit, that's all depends on your experience level. But high liquidity zones point of view, I am calculating. It gave an entry, maybe multiple entries it gave. Has it reached the target? Yes. Before reaching how many attempts it took, I am not really going to care. Maybe some of you might have taken couple of trades in this stock. You might have exited here, took a trade. Maybe you might have exited exactly here in this candle. That also might be there. Instead of waiting until this 15 minutes target area, here we have a 15 minutes target area, rally, base, rally. First time you might have exited based on the price action. Some rejections are there. By seeing the rejections, you may guess some strong order flow which may not let the prices reach up to 15 minutes zone. You just draw a horizontal line. Just before the horizontal line, you will exit. Second trade you took, again you might have exited in the same line. Instead of waiting prices. At the time, at least you might have got even more profit. But what I am calculating, okay, from this entry, maybe here, till reaching here, how much profit I am considering. If it reached this target and again it went, I would have considered second trade. At present, I am considering only one trade. But I am sure some of you would have got two trades in this zone. There is a reason why you are taking second trade. The reason is it has created a rally to base candles drop, or you might have considered this as a rally, base drop, another dynamic zone is created. So already this is a fine-tuned 5-minute zone, 15-minute zone. In that 15-minute zone, again another 15-minute zone is created. Same area, dynamic zone. And again you got a retracement from here. Because order flow is there, you may plan another trade. So multiple trade opportunities you would have got. But at present I am considering as a single trade. This is the entry and this is the target reached. That way I am calculating. And Ramco Cement has given 5,270 rupees profit, which is 4.1% ROA. 4.1% ROA it has given. Okay. And the next one is Hero Motors. This is a 75 minutes high liquidity zone. High liquidity supply zone, 75 minutes. This is the one, rally candle, base candle and drop candle. This is what our software identified this zone. And how I fine-tuned this zone, let me explain. Went to the 15 minutes time frame. So this is a rally candle, two base candles and a drop candle. Rally, base, drop. This is the 15-minute zone. And again rally, base, drop. This is another 15-minute zone. So identified two 15-minute zones. And then fine-tuned with 5-minute zone. See, this is a failed ERC candle as a leg-in. You have a base candle and a drop candle and follow-through candle. So this is an excellent fine-tuned 5-minute zone. But one more fine-tuned zone is also here. You have a rally candle, you have a base candle, and then a drop candle, and then prices were moving down from here. And this entire push is from this 5-minute zone creation. So we are having a clarity that both these zones might be having strong order flow. Okay, because this is the first one, our plan is in this fine-tuned area. If this is violated, then we will plan next trade in this fine-tuned area. This is our trade plan. So in Hero Motors Corporation, see here what happened. And today we got the trade. At what candle? 10 o'clock 20 minutes candle, we got the trade. Sorry, 10 o'clock 30 minutes candle. Here we got the entry. After that, the fine-tuned area is slightly pierced. Not only fine-tuned 5 minutes area, even this entire 15-minute zone area is also pierced. But it is within our stop buffer. Just pierced slightly. Our stop buffer is a little above, somewhere here. Our stop buffer. A little above it pierced and immediately came back, and then prices were started moving down. And finally reached the 15 minutes target. This is the 15 minutes target area. Okay, just before, maybe you might have exited just before. Sorry. This is the 15 minutes target area. Drop base rally. See, you may say, why we didn't draw a zone here, rally. See, for me, I am feeling this is not a base candle. This is a failed ERC candle. And this is the medium size candle. In between there, and after that there is a high explosive leg candle. This is high explosive. It is a large, bigger than the large candles. This is a medium size candle. See, this candle is bigger than the medium size candle. So that's why I consider this is a large candle, but it is a failed ERC candle, and there are no base candles here. So easily when such kind of situation, those candles will be violated easily. But here you have a strong order flow. Drop base rally. This is a base candle. See, this is a big candle. This is a medium size candle, but base candle. This is a medium size candle, leg candle. This candle is bigger than the medium size candle. So this is a large candle, but this large candle is a failed ERC candle. So that's why this is the target. And a few rupees, maybe just 2 rupees before that. Definitely you exit your trade some 5 rupees above that, because this is a 6,000 rupees stock. Some 5 rupees or 10 rupees above you might have exited. So that way you might have booked your profit a little above that. But I calculated exactly from here to here. Because see, in my calculations, maximum opportunity it has given I am calculating. But you won't get it. You won't exactly exit at this bottom of this candle. A little above you would have exited. If you are expecting prices reach and want to exit, prices were started moving, you might have exited somewhere here. By the time you might have lost all your profit margins. That's why always we keep some buffer below our target zone and we exit. But while calculating what is the maximum return it has provided, I am calculating that. Please remember. How much opportunity our high liquidity zone. Suppose if it is given 10,000 rupees opportunity, maybe you captured only 8,500 rupees opportunity because of the buffers you are keeping before the zone, that entry zone or before the target zone. Always you add some buffers. So that's why you won't capture exactly 10,000 rupees. You capture maybe 9,000 rupees or 9,500. Or if you keep more buffers, probably you will capture only 8,500. So that's why always remember the opportunities of the zones are provided are different from your actual profits. Always your actual profits will be less than the maximum opportunity the zone has given. This is the point everyone should understand. Okay, this is the first successful trade. But because the zone is pierced, we need to delete them. So the first trade is completed. After that, what happened? A new zone is created. See the ERC candle, failed ERC candle, base candle, and then drop candle. So a new dynamic 15-minute zone is created, After that, price has moved from the newly created dynamic zone. Again it picked up, because in the fine-tuned area we have identified a fine-tuned rally base drop because the risk is high. Here I kept a type 3 proximal entry. Otherwise my entry would be like this. You may ask a question, can we consider drop-based drop? Because this drop-based drop is picked up the orders from this area. So that's why always you should look into the parent who provided these opportunities. So even if you fine tune up to type 3, even you can fine tune like this also. This is also a valid. This is not a leg out, but this is the leg out. But the actual move, prices were going down, started from this candle. That way you can. See, these points you will understand once your experience grows. At the time you really in a position to understand where the real order flows are there. How you can minimize the risk. All these things you will understand. But it actually type 3 proximal, it picked up. After that it reached the target again. It further went, but at least in this candle, at 15 hour 5 o'clock minutes candle, it reached this 15 minutes target. Those who wants to exit might have exited somewhere in this 245 candle, somewhere here you might have exited. Cash traders. But F&O traders, you would have, after reaching this 15 minute zone, you might have exited. So this is the way Hero Motors has given 2 opportunities today. 2 trade opportunities. This is the dynamic entry. That means this 15 minute zone is created today only. Let me go to the 15 minutes time frame. Say 10 o'clock, today 10 o'clock 30 is the trade. Earlier we got the trade. After getting the trade, prices were going down. At that time a new dynamic zone is created. Why we deleted the earlier zone is because it is already pierced. Once it is pierced, let me draw that zones again. So this is the one. This is the 15 minute zone. And inside this 15 we have fine-tuned 5 minute zone. Both 15 minutes and fine-tuned 5 minute zones are pierced. That's why we removed them. Otherwise, the newly created 15 minute zone, we would have considered part of this zone only. If it was not pierced, we would have considered part of this zone only. Because it is completely pierced, it is no more valid, and then we gave importance to the newly created dynamic zone. And then we planned our trade plan during the live market. And at 12 o'clock 50 minutes, we got the trade opportunity and finally reached the 15 minutes target. So Hero Motors has given 2 trade opportunities. The first trade, it has given 9,975. That is a fine-tuned 75 minute zone entry. It has given 6.2% ROI. The second trade, the dynamic fine-tuned zone. That means today, live market, a new 15 minute zone is created inside 75 minutes high liquidity zone. That newly created 15 minute zone, we have a fine-tuned 5 minute zone. And from there we got the second trade. And second trade we got 9,127 rupees profit, which is 5.7% ROI as per one futures margin cost. So these are the 2 successful trades. Even though the first one is pierced, because it is within our stop buffer area, and finally it resulted as a successful trade until this 15 minutes zone. After that, the newly created dynamic zone, we got the trade, and again that is also a successful trade. And this first zone is no more valid now because it is already pierced. It is no more valid. But this is valid because it is created newly and still it is working. It is not pierced. This is about Hero Motors. And the next trade we got is Tata Chemicals. Tata Chemicals is also a 75 minutes high liquidity zone. So see, this is a ERC candle, considered as a rally candle, not a drop. because prices were moving up. It's a failed ERC candle. In the failed ERC candle, body is small, wicks are big. That's why how wicks are moving. So wicks are moving up. So that's why we need to consider as a rally and base and then drop candle. This is what our software identified, this zone. And this zone fine tuned with 15 minutes time frame. There is no 15 minutes zones here. This is not a drop candle because it is a medium size candle. This is a medium. There is no proper leg out. Such kind of zones will be violated easily. Actually, such kind of zones will violate unless institutions decide to create a fresh 15-minute zone in the recent price action. But in the recent price action, institutions did not create any new 15-minute zone. That means according to our rules, this zone will be violated unless there is any dynamic 15-minute zone creation. What is dynamic 15-minute zone? During the live market, today's market. Yesterday when we are analyzing the stock after the market hours, yesterday market hours, when we are analyzing, this zone doesn't have any 15-minute zone. So according to our theory, this zone should be violated. But today, institutions created a dynamic zone, a rally base drop. This is the zone they created, rally base drop. And this zone is fine tuned with 5 minutes time frame. See, after this candle, in this 15 minutes candle, again prices reached and picked up the orders and then came down, reached the target. So again fine tuned. This is a dynamic zone, fine tuned with, see, this is a ERC candle, this entire big candle, the whole 15 minutes zone it occupied. So you can consider this as a leg in. You have 3 base candles and then a drop candle. So this is the area we need to plan our trade. And in this candle, we got the entry here. And after that, prices were coming down, finally reached this 15 minutes. And 15-minute zone is not very clear. Let me show you. That's why I have fine-tuned with 5-minute zones. See, this is a drop, base, and this is a medium-sized leg candle. We can't consider, but the move started from here. Prices were moving away from the zone. So that's why I fine-tuned. Maybe you can also fine-tune like this. Keep entire thing in the zone. And it is already having a fine-tuned 5 minutes area which is tested. Let me show you. This is the ERC candle as a leg-in, failed ERC candle as a leg-in. You have a base candle and then you have a, this is a rally, this is not a base candle. Many people will think this is a base candle. See, from the close of yesterday's previous, this 5 minutes candle, this is the current, let us assume this is the present 5 minutes candle, this is the previous 5 minutes. From the low you add the body, then this is a rally candle and follow through candle. So that's why this is the 5 minutes. And this 5 minute zone is already tested. There are higher chances zone may violate. And it has one more fine-tuned zone, drop, base, rally. If first 5 minute zone is violated, then definitely prices will reach to the second one. So now the question is, do we need to book our profit here or here? We have a dilemma. Why we have dilemma? If we book our profit here, we get less profit. If we book our profit here, we may get more profit. If prices are moving up, again we may get loss also, that possibility also. But there are higher chances this zone will be violated because it is tested. But why we have some dilemma here? See, next candles before the zone again, it is holding the prices. All these factors are not really convincing. That's why when prices reach near to this zone, we want to depend on the 1 minute trailing stop. If 1 minute trailing stop is not violated, prices go down, we get a chance to book our profit in this fine-tuned area. So go to the 1 minute. See here in this candle we got the trade. 1 o'clock 12 minutes candle we got the trade. And see here you have rally, base, drop. That way you can consider. Rally, base, drop. If this is violated, probably we want to exit. After that, it reached the first 5 minutes, which is already tested earlier. It touched. See the next candle, completely violated. So 1 minute trailing stop loss is not stopped out. Now definitely you can aim for more profit. And finally in this candle, it reached the target at 1337. At 1337, when it touched this fine-tuned 5-minute zone, you can exit. Of course, it went further deep, but we have to exit here. So this is the way we book the maximum profit. We can book the maximum profit. Instead of exit in this area, why we don't want to exit? Because it is already tested. There are higher chances next time it will be violated. That is what happened. And this is a fresh zone. Definitely you need to book your profit. If you would not have booked the profit, see how sharply again prices were moving up. All your profit margins would have been lost. Lot of profit you might have lost. See, for everything there should be an end. And the trailing, suppose if you want to depend on the trailing stop loss 1 minute, see where is your, here you have 1 minute trailing stop loss. If you don't book, if market is reversed, here you would have exited. And all your profit margin would have been gone. Just imagine. If this, here if you would have exited because you didn't book the profit, how much profit margin you would have lost? So that is the reason why sometimes if the 1 minute zones are very, very far away, the immediately expected target level, you need to book your profit. That way you need to grab the maximum profit. Too much greediness is also a problem sometimes. That's why you should apply your intelligence. So finally we booked our profit within 15-minute zone, but fine-tuned area. So how much profit Tata Chemicals has given? 4,647, which is 3% ROA. Why only 3%? Because the Tata Chemicals, the volatility is very low. That's why you got a less profit margins. So these are the trades, all are successful trades in the remaining stocks. GNFC, this is a daily high liquidity demand zone. See, this is the rally candle at the hidden body. This is a rally, base rally. Here identified a fine-tuned 5 minutes area. Sorry, before that, I should go to the 75 minutes. In the 75 minutes time frame, there is a hidden zone in the 75. Many people think this is not a valid 75-minute zone, but actually it is a valid drop. 2 base candles from the close of this candle had the body, hidden body. Then it is a rally candle. Entire candle is a rally. So this 75-minute zone is a hidden zone. Generally institutions keep strong order flows at the hidden zones. And then again fine-tuned with 15 minutes time frame. Thus within the 75 minutes area, identified a 15-minute zone. We have a drop, 2 base candles and a rally candle, drop, base, rally. Within this area again identified a 5 minutes zones, 2 5-minute zones. Rally, base, rally and a drop, base, rally. This is outside the zone. Probably it will act as a dynamic entry buffer, this zone. But even though it is a fine-tuned zone, because it is outside, either way you can feel. So that's why we can plan a trade in this zone. But unfortunately today prices did not enter into this zone. This is yesterday's candle. Yesterday they came very near to the zone yesterday. And today price action is from this candle somewhere here, 9:15. They didn't come. This is only the least level today. Yesterday they came very close. So GNFC we didn't get any trade opportunity. Next one is Nifty Financial Services. This is a high liquidity daily supply zone. Drop, base, drop. And they fine tuned with 75-minute zone. See, rally, base, drop. This 75-minute zone fine tuned with 15-minute zone. This you consider as a leg candle, 2 base candles and a drop. This is a medium size leg, part of the base, 15-minute zone. Next so the leg-in is not really great, so it is a compromised leg-in. Sometimes you know how to compromise the and draw the zones to find the real order flows. The real order flow you will identify at 5-minute zone. 5-minute zone you have a drop, base and drop, drop, base, drop. And this drop, base, drop yesterday, already it tested yesterday. So you can't plan any trade here. So we don't have any planned trade. But see, yesterday it gave an entry and see how much profit it has given yesterday. Huge profit it has given yesterday. Those who looked into this particular zone yesterday, you would have captured the maximum profit. And today anyway, prices didn't enter into this area. We didn't get any trade opportunity. This is today's morning candle. After that, this is the price action. So we didn't get any trade opportunity from this. Next one is Hindalco. This is also daily high liquidity supply zone. This fine tuned with 75-minute zone. Rally, 2 base candles and a drop. Again rally, 3 base candles and a drop. I think Hindalco already I have explained this stock few days back. So I don't want to repeat again. Please look into this stock. I think 2 days back I have explained this, how I fine-tuned this zone. And today prices came near to the fine-tuned area, but even if you add the entry buffer, you can't get a trade. You can't get a trade. So we didn't get any trade opportunity. Next one is Hindustan Copper. This is Hindustan Copper is also daily high liquidity supply zone. It is actually moving between high liquidity supply zone and high liquidity demand zone. Hindustan Copper. So you need to fine tune both. I have fine tuned both because sometimes see, yesterday it took the trade from the zone. See how sharply it moved. And today it came near to this and then came down. This is, I think this Hindustan Copper also I have explained earlier. I think 2 days back or 3 days back video, please refer. We also took, I remember some 5 minutes or 2 minutes dynamic entry somewhere here we have taken. So let me directly go to the 5-minute zone. Today prices came very near in the morning 9:20 candle. See, the blue color line I have drawn is the entry buffer. So a little short of the blue color line. They didn't go. If they would have gone a little above, we would have got an entry today. But narrowly we missed the trade. Otherwise, again, it would have given a very good trade. See how sharply it came down. It might have reached the 15 minutes target. See here, rally, base, rally. It reached this 15 minutes target. But we didn't get a trade. We missed the trade. And remaining all we discussed, Ramco, Hindustan Motors and Tata Chemicals, everything we discussed. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.